All right, so property management. What's the biggest mistake landlords make when they first take on tenants? And what systems did you put in place to make sure you never made those mistakes twice?
The biggest mistakes landlords make is not going through the full due diligence process. So, best practice is to take a full application, with all their information on their social security number included, and getting background check, credit check, eviction check, all of that stuff, and even reaching out to their current or previous landlords to see what their history is. Right, and so if somebody does this maybe once a year, they have a property or two, they may not know how to do all that stuff, or even know that they can get all that stuff, so they won't do all of it. They'll meet somebody and everyone seems nice when they meet you,
Right.
and so they accept them as a tenant, and so yeah, frankly, that's a mistake that people make.
And what systems did you put in place to make sure you didn't make those mistakes? Have you ever done that?
I
Not
have.
fully vetted somebody?
I don't think I have.
Oh, okay.
Which is interesting, because there's certainly a lot of things that I have done, but I think with that, I've always from the very beginning have been good about getting the background on them, and look, having all that stuff doesn't mean that they're never going to skip their rent or move out or need to be evicted, but it does make the chances much lower, because somebody who has good credit, like it's taken years for them to get there, it's unlikely that they're going to do something that could jeopardize that, unless like something really big happens.
Okay. What about handling already tenants you inherit, right? If you purchase a property and it comes with tenants, is there something that you can do to sort of, obviously you can't re-vet them, right? They're in their lease, they're locked in. But is there a way that you can sort of establish a rapport or relationship or anything? Do you even want to do that with tenants you inherit? How do you handle?
If I inherit a set of tenants, we will have a conversation with them. Like if anything, it's to set expectations, right? Landlords operate in different ways, so we want them to know how we are going to be handling their, when they're living at this property, like how to pay rent, or if something breaks in the home, how do you reach out to us and get it taken care of? Like so you do want to talk to them and have those expectations. Of course, we can't, you can't just have them leave the property, because if you buy a property and the tenant is there, you inherit their lease too.
Right.
So you do need to honor that part of it. Of course, you don't have to renew it when it comes to the end of it if you don't want to.
Okay. At what point does it make sense to hire a property management company versus self-managing?
When you just don't feel like doing it anymore. And some people from the very beginning say, I don't want to do it. Like we have lots of tenants who are landlords, some on purpose and some kind of accidental, and I'll be the first one to talk to them and say, hey, like I can show you how to manage this very easily without a property manager.
Right.
But the thing about property management is most of the time it's fine. Most of the time it is easy, but then sometimes it's not. And it's when it's not easy that kind of sucks. And so it really depends on how much or how little you're okay with the risk of there being a period that sucks.
Is there a certain point or a certain sort of like criteria that helps you identify when the decision to self-manage starts costing you more than it saves?
It's something that's really hard, because if you're just coming into it and you haven't seen the hard times, like I said, 95% of the time, maybe higher, it's quite easy. So you can go years and it's like perfectly fine. But like for a lot of people, there may come a point where even if they have to do something like once a year for like 2 hours, they may just not want to deal with it. And I've talked to a lot of our clients who are like that. They're like, dude, I know it's easy. I know I can just do it with a few phone calls and all that, but I just don't want to deal with it. Like I have enough in my own life.
Right.
Like it's I mean, I guess I compare it to, I don't know, if something wrong goes, like if I need a repair in my house, right? Like if the toilet tank, like you have to replace that thing inside once in a while. Like it's not often.
Yeah.
Right? Like it's every maybe 5 years or 10 years. And I've done it before. But I'll tell you that like right now, if that went wrong,
Mm-hmm.
I don't want to go to Home Depot and get it and do all that stuff. Like, I would just rather pay someone to do it because I don't want to think about it and I don't want to do it at all, even though most of the time it's fine. So property management is kind of like that.
Okay. Were you willing to still do the flange replacement before you read Buy Back Your Time, or did this stem from Buy Back Your Time?
No. This happened a long time ago.
Okay.
Look, well, kind of with property stuff in general, and this isn't just like a management thing, like maybe more like a maintenance thing too. I actually had this a long time ago where I had a property where all I was doing was changing out the lock, right? Like for a new set of tenants. Changing out lock is easy. You unscrew the thing, you pull it out, you stick the new thing, you stick the new deadbolt or thing in, and you screw it all together. It takes no time.
Right.
But I did have a time when I was doing this, and for whatever reason, like something went wrong, and things weren't fitting together right. But I ended up taking like 3 or 4 trips to Home Depot, which I hate doing that.
Yep.
You know, and even if it's just 10 minutes away, that's a 20-minute round trip in driving. Then you're 20 minutes there. Like I was there all day replacing a lock, right?
Yeah.
Like it sucked. So after that, I was just like, I'm not doing it anymore. You know, like I'd rather pay somebody
Yeah.
what it costs to do that.
Okay, that makes sense. So we've talked about before how you evaluate a property to invest, like to buy it as an investment property.
Mm-hmm.
Do you have a system for how you evaluate whether an investment property that you currently have is performing well, or if you need to sort of like reconfigure it or even offload it from your portfolio?
Yeah, about once a year.
Okay.
Well, when I say about once a year, I'm supposed to do this once a year.
Okay.
I should do this once a year.
So it's not like triggered
Yeah.
by like lease
Yeah.
renewals or anything. It's
Not, you know, that's probably a good way to do it. But I don't do that because we have a lot of lease renewals.
Mhm.
Yeah. So
Yes.
if I did that, I'd be doing this like all the time, and I don't want to
Okay.
do that. So the best would be to just batch it. You know, maybe once a year, just review it, and really just review your numbers, right? Like you review like how much rent are you coming in, what are your expenses, how much is it costing to maintain the property, and one thing that most people don't even think about is a number called like return on equity, because when you go to buy a property, you'll do all the numbers and you'll come up with some kind of return on investment. You're like, hey, I'm putting in this much cash and this is the return I'm getting.
Mhm.
But the thing is that changes over time, right? Like if your property goes up in value,
Right.
your equity may have doubled, and you know, and maybe the net income has stayed the same, or sometimes it can even go down. So that can completely change the
Math.
Yeah, that can completely change the math, and,
Okay.
and just because like it's not dollars in your bank account doesn't mean that it's not dollars.
Right. How do you separate a property that's just going through a rough patch from one that's fundamentally a bad investment?
It's hard. It's hard to figure that out sometimes, because sometimes you will have a phase when you are spending a lot of money on a property, right? Like the biggest things that can usually happen to a property, it's like a roof. You know, roof has a lifespan and HVAC has a lifespan. Foundation is a big thing also, foundation and plumbing, but those are usually things that if you fix them once, like you're not expecting to fix that every 10 years, whereas HVAC and roof, you're gonna replace them every 10 to 15 years. If you're lucky, you'll last 15 years. So you have to be able to separate those type of things from, gosh, this one's like always really hard to rent for some reason, or there's some kind of issue that happens a lot to this property that doesn't happen to my other properties. It frankly doesn't happen that often. Like most. Like we tend to buy homes that are more kind of middle of the pack and have like large appeal, like in a certain segment. So most of them are going to be pretty similar. Like I've rarely had a property that is just like, man, this is a terrible rental property.
Well, you said rarely, so you have had one. Did you offload it, or?
I have at least one or two that I don't like that much, and when I feel like the timing is right, they'll be first on my list to
On the
let
chopping
go.
block.
Yeah.
Okay. A lot of investor resources talk about scaling up, like you do in Monopoly, right? Like trade houses for a hotel, and you earn more money. How do you know when or if that's even the right move for you as an investor?
I don't. You know, for the longest, you know, we've been buying and holding residential properties for a few years now, and I was always like, hey, this is perfectly fine. It's most of the time it's not that much work, and it's great, and I'm perfectly happy with residential. It wasn't until recently, like in the last few months, that I started thinking, hey, I think it's time for me to start exploring other types of property. You know, for us, we've just come to this point where there's more like work and mind share than I want from the properties, and in part like look, it's a good problem to have.
Mm-hmm.
You know, like we've built like a decent portfolio, and you know, like we didn't, I never had those thoughts when we had like a third of what we had now. But for me, like we are probably at that point where everything I'm getting, like I'm doing it with a certain time frame in mind.
Okay.
Yeah.
When you say certain time frame, is this like a certain time frame for like your business or for your personal life, or
This is for
the property?
Yeah, so when I talk about timing, I'm talking about the investment timing.
Okay.
And let me tell you how it's different from when I started. When I started in real estate investing, what I thought was the case was that everything was just you buy a property, you hold it forever, you pay off the loan, you know, and then you don't have a loan on it, and you get all the cash flow when you're old, and it's massive cash flow and all that. And so everything I bought, I thought I was just going to hold it forever. And through the years, that has changed, right? So I just don't feel that anymore. So right now, the last few years, I've been buying property here in Austin, and the reason I'm buying is because our property, in terms of prices, they came down quite a bit after the pandemic. So we've had that kind of stability, and like things are like well off their highs, and I'm like a value guy, right? Like I'm cheap, right? So I like getting things on sale. And so, you know, we're trying to find deals on properties that are in this kind of depressed, another right word, but like the prices are lower,
Yeah.
right? So we're buying them now, but I'm not buying them, once again, like I'm not buying them like thinking, oh, I'm going to hold this for 50 years. Now how I'm thinking about these is I'm buying these and I'm trying to get a good deal in a market where the prices are already down. So I know like downside, look, I'm not saying it can't go down further, because it certainly can. But at least like a big chunk of the downside is already out of the way. And I do believe that whether it's in the next year, 2 or 5 years, like everything will turn back up again. And the thing is, like, stuff doesn't move like this, like a flat line, right? Like it can do this and hold, and then when it goes up fairly quickly. So my whole thesis now is to get these and really hold them until the market turns up, a bunch of equity gets built, and at that time, like I'll decide which ones to kind of trade out into something else.
Do you know what that something else is?
Right now, I mean, I'm exploring some commercial opportunities, but I can't say specifically like what it's going to go into, but probably like bigger commercial deals.
Okay. I think this is going to be my last question, just because it's might be a little crazy.
Mm-hmm.
I don't know if you'll be able to answer it.
Okay.
Property investment, real estate investment in general, right, sounds very complex.
Mm-hmm.
You know, there's evaluating the types of properties that you want and where you want them, and whether or not you want to like long-term hold them or flip them or whatever it is, right?
Mm-hmm.
If you were to map out the simplest path of getting into real estate investment and keeping it simple for the longest period of time, what would that look like?
I wouldn't try to map it out for that, because I think if you try to do that, you're overthinking, you're overanalyzing, and you're trying to predict a future that may be completely different from what you're looking at right now. Something I think is really nice about real estate investing versus investing like a lot of people in stocks is that you don't have to be that smart to be a good real estate investor. Right? Like, and I'll explain this in this way. Like when you buy a stock, like for you to make money in that, like somebody else is losing money usually, right? And then you also have like you could have just put your stuff in your S&P index, and so if you're putting into individual stocks, like you're looking to beat that index. So you're looking to make a better decision than like the average out there, which is already pretty good, but that's actually like it's hard to do. Like everyone thinks that they can do that,
Right.
but the reality is like everyone cannot be that person. Right, but the real estate, it's so much easier. Like you can look at the numbers that are out there and say like, hey, like am I buying at market, which might be fine. Am I buying below market? Like you can see all these things. You know like what kind of rents are right now.
Right.
So it's only like two things, like how much am I going to pay for this property like every month, and how much is it going to return me. That's all you're looking at, and over time this stuff goes up, and that's that. It's super simple. You don't need to be smart.
So, your takeaway, what people should take away from this is, if you're thinking about investing in real estate, just do it.
Yeah.
Take the lead.
Yeah, and it's simple. The simplest thing is a single family home.
Yep.
It rents to one family. You've got one thing to deal with. That's it.